Someone once told me that the first law of business is who's got the money. Scott Paterson has the money. And if he doesn't have it himself, he can get it for you. In fact, he's gotten it for so many of the new players that have emerged in the last little while in this country that there's no faster way than meeting Scott to meet all of them. Scott Paterson.
Good afternoon. I certainly know what I'm going to be talking about at dinner parties for the next year, and I'm counting on everyone here as a witness that Bruce Cockburn, in fact, did perform as my opening act. So, what I'd like to do briefly today is make a couple of comments. I've only got 4 slides, and the first area that I want to address is the convergence between the theme of IdeaCity, technology, entertainment and design, and capital markets, and the funding and the things that I do with my partners and the people in our industry every day. And then specifically, I'd like to address where Canada sits, because it's a pretty topical matter these days with respect to the brain drain as something that's on the front page pretty regularly, and a whole series of issues around that. So that's where I'm going to head briefly right now. I've only got 4 slides, and the first one, just for some context, these are the sectors that our firm focuses on. And the only commercial remark I'll make is that in the areas of technology, e-commerce and internet, healthcare, which is principally biotechnology, and entertainment, our firm has been involved, fortunately, in more financings than any other player in this country. Financings like Zero Knowledge. We met this morning young Austin Hill, who's one of Canada's brightest lights. And here's a young guy that certainly makes me feel old. He's 26 and I'm 36. But that is the reality in many respects in the technology world. So 5 years ago, I joined Yorkton Securities with a group of people, and we have been focused on building what we call a technology investment bank, a place where entrepreneurs can come and seek funding. And so these are the only sectors that we focus on and finance. I just want to throw some numbers at you, and I don't think the numbers are that meaningful, but some of the themes behind them are. These are the 5 most valuable companies in Canada today. And most people are probably not surprised by Nortel, or perhaps BCE, or perhaps Seagram's. You probably, I'm going to bet many of you have never heard of PMC Sierra. It's based in Burnaby, BC. 5 years ago, it wasn't even a public company, and yet here it ranks as the 3rd most valuable company in Canada. And JDS Vital, also 5 years ago when I joined Yorkton, not a public company, and today valued as the 2nd most valuable company by the stock market of all Canadian companies. There's a real powerful theme here. One is that 4 of them are technology, BC we'll call telecom, and one of them, Seagram's, being primarily an entertainment company. There's no banks. You don't see Canadian Pacific. You don't see Noranda or Inco. So the changes that we're talking about have happened. And this is a pretty powerful slide, particularly, I think, as it relates to JDS and PMC Sierra that are not widely known. These are absolute world-class companies, JDS in the fiber optic networking part of the world, and PMC Sierra in the semiconductor networking area, and companies that are the world leader in what they do, and great templates for what can happen in Canada in a very, very short period of time. I apologize if that's hard to read at the back. It's my 3rd of 4 slides. And just a couple of names. Research in Motion gave out 3 rim pagers earlier today. I can remember one of our big failures, actually, Jim Balseely and I debating over the value of Research in Motion back in 1995 when he was a private company. I'd known him for many years, and a couple of my partners and I were down in Waterloo, and we were quite fixed on his company with no revenues that the value shouldn't be more than $85 million. And he was quite fixed on that it had to be $125 million. And he had a strong vision of what Research in Motion was going to do in the future. And we were actually in his deal, but we didn't lead it as a result of our unwillingness at the time to pay up for him and pay up for the company. And of course, it's proven to be one of Canada's greatest success stories. And I think the number is just incredible. That market value number on the right-hand side, that Research in Motion back in March was valued by the stock market at $18 billion. The peak value for Bank of Montreal, $17 billion. And what the market was saying and continues to say about technology stocks, sometimes with too much exuberance, as some people would correctly say, but they're saying that in this era, truncation of value creation, truncation of actual accomplishment within the economy. In other words, you can develop the BlackBerry Rim Pager, you can make your alliances, you can market it, and within a very short period of time, in their case, in under 4 years, it becomes a staple product in a huge, huge marketplace. And in many industries, of course, that just can't happen. So I think it's kind of fascinating. Research in Motion, 724, two companies that were, 724 just went public last year. Neither one of these companies, public companies, when I joined Yorkton 5 years ago. And I just gave you a grouping looking at some of the major retailers in this country. Canadian Tire, Chapters, Hudson's Bay, and Sears, all of them valued less at their peak values this year. So that's what's happening in the capital markets. And the capital markets, generally speaking, are the leading indicator with respect to what's actually going to happen in the economy. And I think these kind of statistics really tell the tale of the shift that we talk about generically, and yet here are the facts in terms of how the marketplace is looking at them. The last slide, just a quick snapshot. Stelco, of course, the venerable steel company compared to Cisco. Cisco is the internet routing company that has about $20 billion US in revenues. The market value for Cisco is about $450 billion. Trades at over 100 times earnings, which many people would argue is ridiculous. At the same time, you can't build an internet infrastructure without a Cisco product in all likelihood. And Cisco today, on any given day, it goes back and forth between General Electric and Cisco with respect to which is the company that's the most valuable in the world. And what's incredible is that this company was formed in 1986, 15 years ago. And obviously, if you've been an investor over this time frame in something that's actually, the steel business has had a pretty good run in this economy over the last 8 years, you obviously didn't do very well versus companies that were active in the new era. Now I'm just going to turn off the slides if I can, or perhaps they can turn them off. And I want to link for a second technology and entertainment and design with respect to some of the things that we hold very dear to our heart. In first, technology, and on our first slide you may have seen, we view technology very, very broadly. Technology to include software and hardware and satellite and cable and content and media and wireless. And we think that that streams its way through virtually every business. In fact, we showed you the retailers, and I know that our team has spent time recently with Canadian Tire and with Sears working on their internet strategies. And as all the companies that are not, they don't look like technology companies, are figuring out how to embrace technology to make their businesses more efficient and to become more profitable and to have hopefully a competitive edge. Entertainment also weaves its way through all of these themes. In fact, if you think about it, in the technology world, launching a product, I mean, you saw Austin Hill put up his ad earlier today. In technology, when you launch a product at Comdex, the entertainment and glitz is a huge part of attracting the attention of your marketplace. With respect to content on the internet, think of Canoe as an example, which is, of course, the portal for Quebecor. One of the fabulous fits between what Quebecor has is their Sun Media assets of 168 newspapers and magazines, and they have the Canoe portal. And what you'll see them do is roll out into every city. Right now they're starting with the big cities, and they're going to go down to smaller and smaller centers. And the basic content that you'll go into if you're in kamloops.ca or newmarket.ca will be based around that type of entertainment and content that's there. I think the most prolific example of entertainment, though, changing the capital markets is in the whole evolution of ROB TV in Canada, or in the United States, CNBC, or even taking a step further, how Willow Bay, the very attractive anchorwoman, is promoting and being a key part of delivering the business news. Just 5 years ago, magazines like Wired Magazine or Red Herring or the Industry Standard, they didn't exist. And yet today, they have some of the biggest circulations in the United States. So there's this incredible melding between entertainment, technology, and business all at the same time. And I think a statistic that came out the other day was that now in Canada, 50% of the households now, they have ownership in mutual funds or stocks. That number stayed at 20% up until a few years ago for the 15 years that I've been in the business, and then exploded just in the last couple of years. And part of that is the information age and the entertainment that's associated with that. The last area would be design. Now we saw a fabulous designer yesterday, and there's been lots of concepts around design. In the world that I live in, the design would be around things like designing integrated circuit boards, or semiconductors, or silicon chips, or really where the future is in biochips. In fact, I would say if the last 45 years has been characterized, if you had one icon that said, what's characterized the whole world in the last 45 years, it's the microchip. And I would say in the next 45 years, what's going to characterize the whole world will be the biochip. And this is a piece of glass instead of silicon, where right now they can hold 400,000 DNA outcomes. An incredible diagnostic tool. So instead of a conventional protocol when you have a disease, they look at your DNA sequence and they can quickly determine, let's change the protocol around to help you. Which actually brings me to a fact that I also like to share, because I think it shows you the evolution in Canada of healthcare, generally speaking. 5 years ago, when I started at Yorkton, there was not a healthcare company in Canada that was valued at $1 billion. And today there are 5, and we see 3 or 4 more that we think will be billion-dollar companies coming up in the next couple of years, which is really, really exciting stuff. So let me make a few comments about Canada. Whether it's the Business Council on national issues, or the e-commerce roundtable, or the Conference Board of Canada, these days they are making a very concerted effort, which is to be applauded with respect to changes that they'd like to see. But in my view, the message is not all that accurate. The message is that Canada can't compete for a variety of reasons, that we don't have the capital, we don't have the talent, and we've got a big brain drain. And one of the statistics that the e-commerce roundtable uses is they compare venture capital that was invested in Canada last year versus the United States. And the number they use is $2.7 billion relative to the US's $37 billion. And they say clearly that's out of whack vis-a-vis the historical ratio between the two countries. What they're missing, though, is that in this country we have a very, very vibrant junior exchange. Today it's called the Canadian Venture Exchange. It was called Vancouver and Alberta. And we grew up in this country historically without a breadth and depth of venture capitalists, like Dennis Benny, who spoke yesterday of XDL. And historically, we didn't have that body of wisdom, but we had the entrepreneurs, we had the risk capital for sure. Remember the Vancouver Stock Exchange during the mining booms, and back in February and March, the CDNX was trading as many shares a day as the TSE for a few days, so there was huge risk capital prepared to invest in this country. And in fact, last year, companies listed on the CDNX raised $1.5 billion. So when you actually, and that's pure venture money. There's no question in my mind that that is venture capital money. And when you add those numbers together, you get a slightly different picture. What I'd like to do is just leave you with kind of three thoughts. Picture being an entrepreneur in Europe versus Canada. We're always comparing ourselves to the United States, and that's a great bar to try to achieve. But the fact of the matter is there's nothing like Silicon Valley in the world. And what we should be doing is comparing ourselves to other industrialized countries and trying to be where I believe we are today, which is that Canada is the #1 country in the world, next to Silicon Valley, to be a technology entrepreneur. And the best way to visualize that is picture being in Europe and in Canada. You want at the US marketplace, without a doubt. That's where the biggest market in the world is for your technology product. If you're in Europe, you can't call the United States till 2 p.m. because of the time change. You've got language issues. You've got a 6-hour flight. You've got significant accounting issues. The accounting is very different in Europe in many respects than it is in Canada and the United States. Whereas if you're in Canada, the accounting's largely the same. You're an hour from New York, 4 hours from San Francisco. Language is the same. Free trade is the same. And there isn't a week that goes by in which an American company doesn't buy a Canadian company for a huge sum. In fact, that's our best export, because the facts are that most of those entrepreneurs repatriate that money to Canada and start again. And in Canada right now, I think it's very important that we think through what the definition of a great Canadian technology success story is. And in my view, it's this, that the R&D is in Canada. And we have a fabulous reputation worldwide for that, and we need to do everything we can, particularly from the educational perspective, to make sure that we're viewed by the world as the R&D leaders. What we shouldn't do is focus on sales and marketing. There's often criticism that the sales and marketing functions aren't here. They shouldn't be. They should be in Menlo Park, which is part of Silicon Valley. And what we need to focus on is that the CEOs spend 181 days in Canada, that extra day so they pay taxes in this country, and that we provide the things that are great about this country in contrast to the United States, so that they want to bring their children up in this country and their families here, and they want to keep the decision-making for that organization in Canada. So I think it's very important that we don't try to be all things to all people. My last comment around this theme is about where I think that we need to consider using some areas of public policy to shape our future. And I grew up as a anti-protectionism, anti-government involvement, free trade all the way. And I'm convinced now that change is so rapid, particularly in the capital markets, in the economic world, and in technology, that those countries that do make some decisions around public policy may just well have the upper hand. And I personally think where we should focus on is creating clusters of critical mass. We already have them by default. We have software in Waterloo. We have telecom related in Ottawa. We have wireless growing up in Alberta, biotechnology in BC, biotech and animation in the Montreal area. We have already created real core areas, largely by market forces, in some respects by the university settings that they were in. And this is an area, though, through two things. One, partly through the tax regime, and also through the education regime. The political hurdles, and I've brought this kind of thing up with a number of politicians recently, and I see their eyes kind of glaze over as they envision, selling their constituents that Kitchener-Waterloo is going to get benefits by way of software companies that set up there versus Chatham, or some other city. And I appreciate that these are huge challenges, but it is happening in the world. In Germany, they set up bioregions 2 years ago, and they offered infrastructure, and they offered tax holidays, and Germany has had enormous success in a very short period of time in this critical area of biotechnology. In Canada, the one area that's being very aggressive is Quebec. And we actually are incredibly bullish on the province of Quebec. They have been aggressive with their R&D tax policies for years. You may have read recently they've committed over $1 billion to an e-commerce park. They provide grants for technology companies in downtown Montreal. They do have a history, of course, of being very involved in their economy. But in this particular case, as around using public policy to shape these creations of critical mass, because that, in my view, is why Silicon Valley is so successful. And as a country, we, I believe, today are the #1 country next to the United States. But to maintain that, we need to embrace this concept of critical mass. And I would say for those entrepreneurs that we embrace, and that's probably the greatest joy that I have day to day, is the interaction daily with some of the most dynamic people of our era. These are people that can compete with anybody in the world. And the examples of those two companies that weren't even public companies 5 years ago, being two of the most valuable in Canada today, are evidence of what can be accomplished in Canada. Thank you very much.
Thanks for coming.